Hello again, and this is chapter 1.4.2, and I am going to try to have a couple of real-time examples involving options with different expiry times. Now, whenever you are choosing, this is the same demo account. So whenever you are choosing, for example, the binary options. So under the most traded is gold here. But let's say we are choosing the euro US dollar, and we have different option expiry possibilities. For example, today, now it is 12 and 13 GMT, Friday, and we have different expiry times. For today, the first expiry time will be 12:20. That's in about 7 minutes. And I'm not going to take this one because we already had an example under the what is a call and what is a put options for what is a put for shorter term expiries. But let's say today let's say in 45 minutes, so at 13 today, I'm expecting the euro dollar to go down. Now it is 130.35. As you can see, this is the live date, and I'm going to invest $10 for this. The payout is going to be 75%, and in order for the euro dollar to go down, basically I am buying a put option. So I'm applying, and then automatically will be approved. Trade confirmation, so I have the confirmation. So we go down under the portfolio. These are the expired positions. We don't have any expired position now, but now we are having the open positions as being, see here, this is 11.75, the current profit and loss. That means the euro dollar 130.36.7, this is the strike price, and the current price is 130.36.7 as well. At the moment, when for example, see, this is 130.30, so well below the current price on the euro dollar. Now this was with the expiration of 13. Let's choose another option so that we can differentiate them. Let's choose an Australian dollar, US dollar. Today, let's say later in the day, I don't know, something like 5:10. Okay, so 5:10 today GMT. Will say that the Australian dollar, US dollar will also be going to the downside. So we'll buy a put. Let's invest here $11 US, and that would make a return of 19.36. We are applying, and the rate is 19.30. Trade confirmation. The option should be to the downside. As you can see, euro dollar 130.30 being in the money at the moment. In that will expire at the moment, and see here different expiration. This is today 13/17. When you don't have the date but you have only the hours here, this means that the options are expiring at that date. Now, for example, let's choose one other asset class. Let's choose, I don't know, let me see, commodities. Let's choose gold. Now gold, now it is dealing at 1,273, and let's say that let's say tomorrow, the next possibility that we have is tomorrow at 17. As you can see, by the next day, the next day is not going to be tomorrow, but is going to be 1 week. So 1 week is the minimum under this platform that you can trade more than 1 day. So next week, 7 days from now at 17:10, I am looking for gold to be to have a higher value than this one that you see here. So I am buying a call option, and I'm buying a call option. I would like to invest 12 US dollars on that outcome. And if 1 week from now at 5:10 GMT the price is going to be higher than the price that we are going to have the confirmation now, that would mean that we are going to see a potential return of 21.12. Now, as you can see, the euro dollar option that we've choose to expire at 13, so in about 22 minutes, is in the money, and the Australian dollar US dollar is out of the money at the moment. Being out of the money at the moment, it means that this value is this value is 0. This value being 0, then the total carbon profit is the profit on gold here, okay, 21.12 plus 17 plus 1.75, and that will be carbon profit and loss is 40.37. Now this is not entirely true, because normally you are receiving only 75% of the amount invested, so the 40.35 is the amount in its entirety, but nevertheless it is still positive, sorry. And if you want to go on different time frames, so more than 1 week, as you can see, this is 26th of July, this is 2 weeks, or you have 30 of September, then 31 of March, and so on and so forth. If you are a speculator, then normally you should stay on the day-to-day option expiries, and basically you should stay on the shorter time frames, like 5-minute chart, 1-hour chart, so on and so forth. But if you are an investor, okay, and you want to build your position and to keep your position on longer time frames, and you are trading a contract in triangle that goes on the higher time frame, and you expect the triangle to break in the certain direction, but not today or tomorrow, but something like on a week or a month or so, then you are looking for an option for a potential return of that of 75% that would expire in a couple of months, for example, and that should help you, let's say, have your triangle resume. So this was the different expiry times, and the real-time examples of options with different expiry time. Now, at the expiration date, you will see if you receive something or not. In this case, as you can see, the Australian dollar US dollar now, but before the expiration date we still have some time. So if the Australian dollar US dollar goes at 17.10 and it's going to be above the strike price, then this would pay 0. Otherwise it will pay 75%. Now we'll move on next with the next chapter, so stay tuned for the next recording, please.